Ladies and gentlemen, we are back for another beautiful YouTube update with our friends in Discord. We got about 10 or 12 or 13 of you in here. I don't even know. It's growing so fast and so quick. I just want everybody to know I appreciate you being here. And if you're watching this at a later time, you're more than welcome to join too. Hit that Discord button or the link tree in the description down below. You will find it there and you can join this awesome community as well. So, what are we going to go over today? Well, the state of the market first and foremost. Then we're going to go over the economic calendar because we have some data dropping tomorrow at 8:30 in the morning. You need to be very, very aware of that because this, I think, is what's going to move the market away from that 10-day moving average. And then, of course, we're going to go over the trades I took today, and we were going to go over the watch list. So we have a lot to go over. If you guys have any questions, like I stated before we started recording, please just say it. Just say it. Don't spray it, baby. All right. First and foremost, guys, if you are not aware, I am sharing my screen. Please click on my screen so you can see what is going on in front of me right now. Okay, we are going to go over, this is Trader View, guys. If you guys want to be a part of that Trader View, Dan will post that in the chat. I have a link for you. You're more than welcome to use it. It's free. If you use my chat and you decide to upgrade to the Essential plan, you get $15 off, and yeah, you can use it. It's free. We're never going to sell you on anything, but if we can get you a better deal, we will. So Dan Bob, if you'll throw that up in the chat for me, I appreciate it. The S&P 500, ladies and gentlemen, for the past 4 days has been squatting down on that 10-day moving average. If you guys take a little peeky gander right here, this is absolutely beautiful. Now, I do like to always point out, if we go back here to previous days, it does follow that 21-day moving average as well as the 10. So we still have room to pull back here. I don't have a crystal ball. I don't know whether that's going to pull down to the 21-day moving average or not. But when I look at the overall S&P 500, and I want to try and have a biasy in direction, I would say that this is holding out very, very well. Now, with the data coming out tomorrow, we could find ourselves heading down if the data comes out hot. Okay, and we'll go over that very, very soon. But do keep in mind, if the data comes out as expected, as the overall market has been data-driven lately quite a bit, if the data comes out and it's geared towards inflation, we are going to rip tater chip to the north side, and you're going to see that at 8:30. Okay, now the two biases that I would like to have here is if the data comes out and we see a nice influx in volatility and the market starts to head to the north side, then we might expect a nice pullback first thing in the morning to kind of like test the waters, I like to say a retest of where that data came out. That is one biasy that we can have, that if the market data comes out and we shoot up, that we have a little pullback and then we launch toward the north side and start to become either more extended or trade sideways above after we push up higher on the data. The other biasy that we can have, just so we're not taken aback or by surprise, is if the data comes out hot and we flush down, maybe we flush down and bounce off this 21-day moving average. We've seen this happen before as well. Now, I love to play off this 21-day moving average because a lot of your institutional ownership plays off the 21-day moving average. And if you're new to this channel, you may ask yourself, well, why are we looking at the S&P 500? Why aren't we just looking at the watch list? Well, plain and simple, guys, when you look at the S&P 500, if the S&P 500 is in an uptrend, the stocks that we look at are relatively strong compared to the S&P 500. If the S&P 500 is on a stage 2, meaning it's heading higher using Stan Weinstein's stage analysis, then our stocks that we choose are going to generally do better in that market, okay? So that's why we look at the S&P 500. Next up, now just to generalize this, I am still risk on. Anything above a 21-day moving average and the 10 and 21-day moving average are heading north, they're not flat or heading down, I am looking to stay risk on, and I am risk on, okay? Next up is the QQQs. If we look at the QQQs, you'll also see we are above a rising 10 and 21-day moving average. We've seen a nice push. It's holding that 10-day moving average, and it still looks very, very strong. I still think we have plenty of room to head higher on this bull run. Dan actually just posted this up in the chat, guys, if you want to take a little peek right here, you can see right here is that trading view. If you want to know how to set up your trading view like ours, it is in the Swing Trader School on the YouTube. Make sure that you set that all up. Nalani says, Dave, can you explain what is green, red, and white lines on graph? Yeah, absolutely. So I use moving averages, and you can use whatever moving averages you want, but I use the 10-day moving average, which is this white line, the 21-day moving average, which is this red line, and the 50-day moving average, okay? These aren't all buy and sell like recommendations when it hits these lines. I specifically only use these lines to give me a better understanding of where the overall market sits, all right? So anytime you see these lines, there'll always be white is the 10-day, red is my 21, and the green is the 50. If you see a yellow line like on my other charting platform, which is this, you'll see this yellow line right here. That's the 30-day moving average. I do use that as well, but not nearly as much. TradeWise has a question and asked, is it a simple or exponential moving average? The 10 and 21-day moving average are going to be the exponential moving averages, as to where I keep the 50 as a simple moving average. You might have the next question of what is a simple and what's an exponential? Well, the simple moving averages are very more gradual, okay? That's 200-day moving average is down here. This is your 50-day moving average, and those are simple. Where the exponential, they take the data in quicker, they ingest it, and they regurgitate that information a lot faster. So I use the exponential on the 10 and 21, and I use the simple on the 50 and the 200. Okay, very good questions. Thank you very much for asking those. So the QQQs is your tech-heavy ETF, and you can see right here that it is holding that 10-day moving average as well. Now, the concerning areas that we need to talk about is the IWM. This is your small to mid cap. This is your very small areas, your small market caps, your small and mid, just the small stocks, okay? This is your Russell 2000, or also known as your IWM, okay? So we have our S&P 500, which holds all of your best companies, your most durable companies that are out there in a bunch of different sectors, as to where you have the IWM, which is your very small and mid cap stocks, your smaller cap stocks, okay? So we need to look at this, and we need to understand that we are still below a 50-day moving average and under all the moving averages here. Now, one thing that we can point out on this chart, let me go ahead and get rid of some of this crap. What we can point out on this chart, though, is we have this trend line that we can pull off of this right up here. It's holding this trend line, but I'd much rather see this on a better uptrend. Okay, now we know the IWM, if we look back in time, that the IWM is a laggard. So as the market pulled back, the IWM waited a very long time to pull back, and then it's just been trading sideways. Sure, I'm happy to see it above this $200 area, but when I look at this IWM, I would love to see it at least above its moving averages and trending to the north side. This is trending to the long-term north side, but short-term, because it's below all these moving averages, it's down, okay? Not too concerning with the overall market looking positive, but we also want to look at the RSP. Now, if you don't know what the RSP is, because you're new to this channel, we always look at the RSP for breadth in the market, meaning the S&P 500 is not equally weighted. If we look at the S&P 500 and we look at this stock heat map, you'll notice that Apple and Nvidia are humongous. Microsoft, Google, Meta, they're huge. Amazon, very, very big. Tesla, huge company, right? That makes this unequally weighted. Your electric technology, or your technology in general, is going to have more weight on the market than the rest of the market. So in order to categorize or see where the market sits without those huge tech industries leading or dragging the market up, we always want to take a look at the RSP. So I bring up the RSP for good reason. We want to see where is the market without tech dragging it up. And we can see this is what I like, okay? Well, let me tell you what I don't like. I don't like that we're under all these moving averages, but what I do like is that we are on this trend, okay? If I pull a trend here, we are still holding a trend, okay? For a while there, we kept breaking trend, but now if we look and we zoom out a little bit further, we can see, guys, that this trend is starting to base out, and I've been saying for a long time, there's a lot of negativity out there. But with the S&P 500 holding up so well, with tech holding up so well, imagine with me if the RSP, or the equally weighted, or the breadth of the market starts to rise up with it. Okay? And I always tell you guys, it pays to be positive. There's a lot of negativity. There's plenty of bears out there, especially the people that got hurt in the 90s and the people that got hurt in 2021. Okay? People that made a ton of money in 2020 and lost it all in 2021 because it was a free market, right? You could put your money in anything and make money, and then they lost it all. Everybody's very skeptical of this new bull run. We've been on this bull run for 2 years. I think if we use history, we still have 3 more years to go. Now, I could be absolutely wrong. We could fail from here, but it pays to be positive. And what I like to imagine is, while we use risk management, if we can pay attention and keep a nice trend line here, get above these moving averages along with the S&P 500, I think we still could head much, much higher. Now, you guys have been with me. Some of you have been with me for a very long time, and you guys know when we're below a 21-day moving average, I don't sound as positive. I'm very cautious. I'm not in trades. But when we're above a 21-day moving average in the S&P 500, I am positive. I do talk a good game. When we broke the 21-day moving average here, you didn't hear me saying all these things. I said, protect yourself. Watch the downside. Watch to see what the relative strong stocks in the overall market are holding up while the S&P 500 pulls back. And then what happened? Well, we started to rise, and I told you about this $500 area, the psychological and technical area, and it bounced off this very, very well, and then it rip, tater, chip to the north side, right, guys? So when we're up here and we're riding and squatting down on a 10-day moving average, I am risk on for very good reason, and that's why I like to imagine the breadth in the market taking us on a little higher. So with that being said, guys, before we carry on, yes, I am still risk on. Do we have any questions? You guys can put them in the chat, or if you're feeling comfortable enough, you can go ahead and unmute yourself to ask them while I take a little sip. So shawana, I sip shawana. Oh, that was good. Got me a energy drink today. I know, they're bad, but it's delicious. All right, guys, so I am still risk on. The S&P 500 is looking very, very good. The only other thing I haven't looked up that I like to bring up is the VIX Volatility Index. This is what I consider a fear gauge, okay? This fear gauge tells me if this is higher, more stocks are selling. It has an inverse correlation, okay? This was the Middle East tensions right here. This was the last time we got a big spurt of volatility. And you can see since then, we have been trailing down. We had a nice little spurt here, trailing down, nice little spurt. It's just averaging, or it's evening out. It's showing we don't have any fear in the market, and that's a very good thing. Now, after that data gets dropped tomorrow, we might see some fear in the market, depending on what the data is, okay? And so that's what we want to go over next, is that data. And I don't dwell on the data too much because there's not much that we can really do with this data until it comes out. So we just want to know what is supposed to come out and what it means, okay? So we have the GDP, growth domestic price. I'll just read you guys verbatim. It just makes it easier. But growth domestic price is going to measure inflation, okay? It's not the best measurement of inflation. That's coming up on Friday, okay? And we'll look at that very, very soon. But when GDP comes out, we want to keep a very close eye that we come out on a lower forecasted. Gross domestic price measures the annual change in the inflation-adjusted value of all goods and services produced by the economy. So we want to see this lower, okay? The lower that we go, the less that we are having to spend on those goods and services, okay? So it measures the annual change in the inflation-adjusted value of all goods and services produced by the economy. It's the broadest measure of the economy activity and primary indicator of the economic's health. Now, why would we want to see this lower if it's showing economic health? Well, because of the Fed rate stays at 5.5%, we want to keep the economic contraction at hand. Because inflation has been moving this market and the inflation is data driven, we want to see that those interest rates are actually slowing the economy down. Because if we have a speeding economy and it's constantly moving up, you're going to see something like this. When you see something like this, that means that more people are spending more money and we are going to have more inflation. Okay. Bob Dan just posted our Facebook group in the chat. If you guys are more than welcome, if you're part of Facebook, you can join that. Next up is the initial jobless claims. Now, initial jobless claims is going to measure how many people are filing for that unemployment. Okay, we want to see a higher reading as of right now. Why do we want to see more people filing for unemployment? Well, plain and simple, if more people are filing for unemployment, less people have a job, which means less people are spending money, which is the simple economic of supply and demand. If less people have money, less people can spend money. That means the inflation has to come down because there is less demand, there is more supply. When you have too much supply of something, then the prices go down for the people to be able to afford that. So we want to see a smaller number, not so much generalized for the forecast, but we would like to see also, a larger number, not generalized by the forecast, but at least a larger number from the previous 238. So we would like to see it at least 237 to 238. Okay. It sounds like Predator just joined. Welcome, Predator. This is being recorded, so please refrain from using any of that silly stuff till the end. Please and thank you. So, ladies and gentlemen, this is your economic data, and it will be coming out at 8:30. 8:30 tomorrow, so stay tuned. And I would highly suggest not just showing up, rolling out of bed at 9:30 and taking a little peeky gander at what's going on in the market. You should be here for that 8:30 drop so you can see what's going on with the data. You can see how the market ingests this data, and you can ingest it yourself to get a better bias of where the market's headed. Okay? oh, is that you, Dan Bob? Predator usually is the one that uses that, but yeah, no, Dan Bob, ease up on that until the end, then we can have fun.
Seems fitting at the moment.
Oh man, but Predator, it's good to see you, brother. I seen a couple of you guys joined in after we started, but it's good seeing you guys. It really is, man. Okay, so that's the economic data. Do we have any questions about the economic data? I know it can be confusing, but do keep in mind when the economic data comes out, I will do a YouTube short on it at 8:30. I will have it out within 5 or 10 minutes. It's a great news feed. I ingest it and I put it out in a very simple way so you can understand it in less than a minute, although it takes me time to actually put that data out, but I'll put it out in the chat for you right away. Okay? Do we have any questions on the economic data, guys? No? Good. I know economic data can be kind of discerning, but do keep in mind, you don't really have to understand it as much as you have to see and understand that there will be volatility at that 8:30, okay? When 8:30 rolls around, you're going to see a bunch of that data get dropped, okay? And then you'll see volatility either push the market to the north or south side. Then when you see that volatility, you're going to watch it ingest. So regardless if you can understand what that data means, you're going to see it in the technical patterns. That's why technical analysis is king. It is king. You'll hear me say it quite a bit. Technical analysis is king. All right, so there's my castle. Didn't mean to show that, but let's bring up this. So I love using TraderView, guys. I always want to get you guys started on TraderView. So if you don't have TraderView, you should click it, that link that he put in the chat, just because, guys, this TraderView is extremely powerful, and we can add all of our indicators that I use on it so that way we all can trade the same. And you'll understand why we want to trade the same is because we're all looking for these same patterns. I do base and trend breakout patterns. If you guys haven't watched it in my Swing Trader School on YouTube, Dan Bob has posted it in the chat. Remember, everything is free, guys. I will not ask of any money from you guys. And I also will not ever send you a friend's request or reach out to you in a direct message. These are scammers, okay? I will never, I have my own money. We have our own money here. I'm not going to ask for you to buy anything or buy a course. I'm not a guru, okay? I'm a swing trader, and I do live trading, live commentary, and bring you the data all for free. And there's a whole reason why we do this. I found it all for free. That's how I learned. That's how I started making my money and started trading full time, okay? You can do the exact same thing. This is why it's a free resource, okay? But I want to offer you guys these free things that give you powerful charting so you can understand and trade just like I do, okay? Then on top of that, you can see how we set this up. Our boy Covey made a beautiful video in that swing trading school in our YouTube that I highly recommend watching and following how to set this up on your PC. You can even set it up on your phone too. Okay. And then if you want to buy that essential plan, you can do that on your own. Just make sure that you're using my link so you get that $15 off. That first month will be absolutely free. I think you get a free trial with it too. So you'll probably get around 2 months free. All right, so keep that in mind. But we're going to look, I have to show you on this because this is my charting platform or my brokerage platform. I just want to show you guys what I traded today. Let's see. I'm sorry, I didn't have any trades today, guys. There was quite a few trades for my alerts that went off, but there was no volume to back it up, okay? So I always look for that volume to back it up, but I do want to show you the trades that I closed out on. So DYN, if you guys remember, I took DYN about 3 days ago, so 4 days ago now. And here was the trend right here. We get a big push up. It traded sideways, another big push up on volume, guys. And keep in mind, this is how I trade. I look for trend breakouts or base breakouts, okay? And you can see there was a trend and a base here. So I decided to take this. You can see that volume came in right here. On the 5 minute, it looked even sweeter. I'll even show it to you on the 5 minute so you guys can get a better understanding. Here's that 5 minute volume. It doesn't look like too much here, but if you look and measure this compared to the previous days here, you'll see that it is much higher than the previous day's volume, and it came in here. So I decided to take this trade at $33. Now, after this pushed up and it gave me a nice risk reward, I took out half of my shares right here at $34.77, and then I brought my stop loss up from $32.53 back up to break even. So I made a very small amount on DYN as it broke out higher and then pulled all the way back and stopped me out today. Okay. Now, as you can see, right after it stopped me out, it started to pull up higher. That same thing happened on CAMT. As you guys can see, I took CAMT, I took out half of my shares, and then as it pulled back, it stopped me out and now is trading higher. Yes, this can be frustrating, guys, but when we trade sideways in the S&P 500, this usually happens. If we look at this 5 minute in the S&P 500, if my chart stops wonking out, you can see that's why I'm getting stopped out on some of my trades, but this is also the reason why after we hit 1, 2, or sometimes 4R, we will take out half of our trades because I am not losing on these trades. I'm locking in profits as it comes back and stops me out, and I'm protecting my capital while we are in this sideways choppy market, okay? So that's the whole reason why DYN stopped me out, but I still made a little bit of money. CAMT, it stopped me out, but I still made a little bit of money. That comes over time. After you've been trading for a while and you see these markets, some of them stick. Okay, now I'm still in NVDA, as you guys can see. I played this daily trend break. I'm just showing you on the 5 minute. I'll show you on the hourly too because it's a lot cleaner. I'll show you on the daily as well because I think it's better to learn on the daily. The daily had a quick pattern pullback, okay? A huge pattern pullback. So I like to look at these bigger patterns, these 3-day patterns on the hourly to help show what is to come. And we can see if we pull a beautiful trend line here, it broke out and then at that market open, I watched it drip down and pull right back up. So I used this low of the day as my stop loss here. I only took half of my share size in this, knowing that the market was choppy, knowing that we had this rubber band effect. I only took half of my share size, guys, and we were up a nice juicy amount yesterday. It pulled back. I'm still holding on to this. Okay, so my active trader, I'm only up $140 in this currently. But this trade, I will eventually add into if it wants to break out higher, but that is in good time. I'd like to get full share size, which is 100 shares of this. If I can get 100 shares of this and then it makes back up here, that's $2,000 if I can get full share size into this. But it's going to take time. I need it to set up again. If we look at this hourly, it does look pretty clean for another setup here, but I just don't trust the market completely. As I was telling you guys yesterday, I want to see what that data brings. I really think that tech still can go higher, but with the RSP, I would still like to see breadth in the market. I'd like to see the market money go into other places, not just tech, because we've been rip, tater chipping for a long time now. Now, of course, we have our long-term accounts that we did for the YouTube, like VOO. You can see all these green areas. As we were pulling back here, guys, I wanted to show you how we invest. When we have these big pullbacks, instead of being hands off completely in the market, that's when I start buying in my long-term account. Okay, we bought in on these pullbacks, and let's see where we're at right now. We're up about $389 just on this pullback from 2 months ago. You know, this is why I always want to let you guys know it is very intuitive for a long-term account as well. Whether you have a 401k or a Roth IRA, I will always preach long-term investing. I don't ever plan on selling these, okay? But I plan on, if it comes back down and starts breaking down, buying more. That's just what I do. That's how I invest for the long term. Anytime we have a big chunk of money in the savings account, we buy more. That's just what we do, because if you have extra money and you're blessed to have that extra money and you don't want anything, I'm set, guys. I'm set. I'm very happy with what I have. I don't want to buy a new fancy car or a Lambo or anything like that. I'm just going to invest for the wealth of my future, right? The wealth of my children. And so that's all in due time. So this is what we try and do. We try and show you how to invest with this YouTube channel. So we just do this on the small account to help show you. We also have VTI, guys. I did this with my brother to help show him how to invest. We're up about $434 on this long-term investing account too, okay? So that's all I am holding, guys. That's it, just in a video right now while we wait for that data to drop, okay? So any questions on my trades, how I trade, or anything like that before we head on to the watch list? Any questions whatsoever, guys? Well, let me get a sip. I'll give you one more sec. All right. Okay. Now, I've been very, very busy today. I did not come up with like a crazy long watch list. I want to really dial in on just a few very, very key trades here. So I'm going to give you about 4 or 5 trades that I picked up that I'm going to put on my daily watch list. Now, if you guys aren't aware, every morning I will go ahead and post right here in this daily watch list. So if you click the daily watch list here, you can see every day, except for yesterday, I have been posting a daily watch list. Okay, so here was the first watch list. If you guys remember, we called out NNE right here. It's 9.6% RS, ADR, RS rating of 95. A break above 750 on volume would be great, risking the low of day. We called this out for you guys. A lot of us made a ton of money on NNE. I personally made a little over, I think, $3.5 grand on NNE. That was a beautiful trade. And you guys have to keep in mind, this is a watch list. This isn't a playlist. It's a watch list. And then after they break out on volume, as long as you understand risk management, you can play these as long as you understand that they are your trades. They are your trades. The second you hit buy, they are your trades. They're my ideas. Okay, so keep that in mind, guys. I'm not responsible for anything. Now, this is our next daily watch list. Now, guys, I put these on here. I give you a little understanding of why they're on my watch list. And today, I had these on my watch list, and I still have MRUS, USM, VLN, NNE, and GEV on my watch list for tomorrow. So I'm probably going to repost most of these. But I also want to show you a few more that I picked up on this beautiful, beautiful watch list. And one of those is going to be CRDO. Now we can go ahead and do this on our beautiful charting platform, Trader View. CRDO. Now this CRDO, why am I trading this? Why do you guys think this is on my watch list? Can anybody tell me, please? I want to make this a little bit more interactive today. What do you see here, Dan Bob? B. Stewie? Come on, guys.
Base breakout.
Darn tootin'. It is a base breakout, guys. I absolutely love base breakouts, and I love trend breakouts as well. Now, this is a base breakout, and it looks absolutely beautiful. Not only is it a base breakout, but I love those psychological areas. This is the $30 psychological area. Not only is it a base breakout, but if you guys download our Trader View using that link, this is something you can download too. This is the RS rating. What is RS? RS stands for relative strength. I only trade things that are above 90 in the relative strength department. Okay? Absolutely beautiful when you see the RS rating above 90. That means it is strong compared to the market. Why do we want to be in these? Well, when the market starts to pull back, these relative strong stocks don't pull back nearly as hard or fast as shit stocks. If you're in a lower, relatively strong stock and it's lower compared to the overall market, they're going to pull back a lot faster, a lot harder. So if you're in a penny stock, those don't, the smaller cap, the mid caps, those don't usually they don't usually move with the market. Those are their own beast. But if you're in, let's say you're in Tesla, and Tesla's RS rating, I don't even know what it is right now, but we'll look at it. I think it's gone up. Okay, it's at 36, guys. So if the overall market pulls back, generally Tesla is going to pull back a lot harder and a lot faster. Now I'll tell you this is probably a bad example because first of all, as the market went up a little bit, the Tesla went up a lot today. Okay, but this is a lower RS rating. Okay, the RS rating, Nalani, yeah, man, I'm having such a hard time with that name. I will get it down pat, I promise you. But Nalani, yeah, this RS rating updates every day, every single day. If you look, you just want to look at it on the daily. It will update every day. If it gets a good pop, you'll see the RS rating go up. It's relative strength to the overall market. So if you see it the same day, the same each and every day, it's because it's not relatively strong compared to the market. But if it shows strength, let's say the market starts heading down and Tesla starts moving up, you'll see the RS rating start to head up higher. Okay. So CRDO, first of all, the RS rating is 98. Second of all, the ADR, if you look at the top right of the screen, is 5.69. I like anything above 4%. This is 5.69%, meaning it moves around the average daily range of this percent is 5.69, means it can move 5.69 of its average daily range, okay? So we are at a base breakout at a psychological $30 area. It is a technical base breakout pattern with a relatively strong stock of 98%. You are going to see this on the daily watch list tomorrow. I guarantee you. Now, is it going to work out? I don't know. I have no idea, but I'm setting myself up for something to happen. If I zoom in on the 5-minute tomorrow and it's breaking this 30 on higher than average volume, meaning if I zoom in on the 5-minute and I look and I see during the day, not in the beginning of the day or the end of the day, but in the middle of the day, let's say, a few minutes after market open, or it breaks through in the morning on higher volume on this 5-minute, I will look back. Let's say it's got volume like this right in the morning and it breaks through that 30 on volume. You better believe I'm taking a trade, okay? And I will risk either the low of the day or low of the previous day, okay? So that's how I take these trades. So you can see we are very, very close to this breakout right here, okay? Very, very close. So let's say we get a nice pump of volume right here and we break out above that psychological $30 area on volume. I will take a bid using either A, the low of the day, or B, the low of the previous day, depending on what I feel comfortable with. That is a discretionary entry, okay? So CRDO is on my watch list, and I highly recommend putting it on your watch list, but I will also update you guys with my daily watch list tomorrow morning. Another one I found was COHR. If we take a look at COHR, you guys are going to find another nice trend and base breakout. So we are trending. We have an ascending trend line here. I'll just draw this out for you. We'll go ahead and use this beautiful charting platform, and we'll go off of this, and we'll pull this up, and then we have a nice base top. Now, this isn't the cleanest top, but I do like the way this is looking, okay? We broke out here a little bit. It wasn't on volume, so I don't really care for it. And this one here, we're just getting tight on this 10-day moving average. See how it breaks out higher on volume? It pulls back and it starts to follow this 10-day moving average. Now look. So if we zoom out, what else do I like about this? Well, if we break out on volume, we're going to get above all this area, and we can easily head up to this $89 area. We're also above its average daily range percentage, above that 4%, and the RS rating is above 90. It's at 98. Okay, so I highly suggest COHR is on your watch list as well. And of course, we want to make sure we're in hot sector, guys, and electric technology is a hot sector. How do I know? Well, we can bring up the Spider Sector Tracker, and we can see that technology is, well, not today, but if we go over the past 5 days, you can see, well, let's look at the 1 month. I'm sorry, guys. The consumer discretionary, communication services and technology is a hot sector. In the past 1 to 5 days, you can see technology had a nice pullback, but we are still in a hot sector for the month and for the 3 month and for the 6 month and for the year. Okay, you can see technology has just been extremely valuable to be in. Okay, so keep that in mind. We are still looking in hot sectors. Okay. Let's see what CRDO is and as well. Technology services. Okay, so that's another hot area to be in. Now we also have USM, and this is what I found very interesting about USM, guys. Right towards the end of the day, I had to keep resetting my alert because at the end of the day, it kept breaking out higher. I would reset my alert because on the 5-minute time frame, I wasn't seeing enough volume come in on this thing. Okay. We started to see some higher volume, but it wasn't higher than average, really. It wasn't anything that really stood out to me. Okay. Now, at the end of the day, you'll have these imbalances, and you can see we had a high imbalance, and a lot more people came out with a lot more volume. So let's see. What I want to see tomorrow morning for USM is for a big pump of volume to come in first thing in the morning. And I would be happy to take this on an opening range break. Okay. This is a beautiful looking stock. It's also in the communication services. The communication services, as I just showed you, over the past month, you can see the communication services is very, very high. It's up 3.63%, and we can see that on the overall sector ETF. So this is another hot sector. I've been telling you guys this for a long time. The consumer, excuse my phone, it's blowing up right now. That's also a very hot sector. So communication discretionary, communication services, and technology has been very, very hot also for a while there, but it's been cooling down as the restaurant sectors. So we can take a look at those a little later. So let's see. HIMX is another one, guys. HIMX. This is a new one that I found here. Now, I want to give this some more time, but this does have a nice base for me at the top. If it can keep trading sideways and let this 10-day moving average catch up, I do really like the look of this stock. I really like the way it's starting to work out, to pan out here. So this is also on my watch list. I don't think this thing's going to take off tomorrow. Of course it could, but I would like to give this some more time, watch this ship shape up. RS rating 94. It's electric technology. You guys are starting to see a trend here. Electric technology seems to be picking up. We're starting to see a lot more trends on that electric technology. So just put that in your head. It might be something you want to think about. Maybe we start seeing more electric technology. We find the leader in electric technology, and then we can find what is setting up the best. It also has an ADR percentage of 4.8%.
What's the ticker on that one?
This is HIMX, not to be confused with HIM, which is hims and hers. That is a healthcare stock, and this is a electric technology. So HIMX. And then I have, we'll go over two more, guys. I'll give you two more. So ACLS, you guys can obviously see this has I'm sorry. This is not a good stock. I need to get rid of this. This is a lower RS rating. See this RS rating of 69? Okay, this needs more time. It needs to prove itself. It needs to show that it's relatively strong. Because let's say we get bad data tomorrow, this thing is just going to fail. Okay, so I don't really care for that. And still on my watch list, MRUS, because it's setting up this beautiful trend. I can draw it out for you right now. I like to take the trends off the tops and pull it down. Sometimes I don't use the wicks. I'll just go like that. So that looks really beautiful. It's setting up on this 10-day. Danny actually pointed this out to us yesterday, and I even was saying I'd like to see a couple more days. Now we're getting another inside day on this. So if this thing can break out of this trend line on volume, let's say after that data drops tomorrow, bada bing, bada boom. Healthcare is a hot sector. We've been talking about healthcare, which is XLV. We can see right here. I've drawn this out for you just to show you guys. Don't look at the relative strength when it comes to the sectors. We just want to look where they're at. Okay, so this is where this is at. Don't mind the yellow bars. It's showing a high tight flag here. So if it breaks out on volume, healthcare is going to be at a new all-time high. It's very, very close to breaching those new all-time highs. So I really do like where it sits currently. What's up, Just a Rookie? Glad you could make it. All right, so XLV reached close to those new all-time highs. We have GEV as well. Let's take a look at GEV. So GEV is producer manufacturing in electrical products. Go ahead and take a look at that. And look at this, another beautiful base. We also have an RS rating of 97. That means it's relatively strong compared to the overall market. This is what I like about GEV, guys. It's a newer IPO. Do you remember the last new IPO that we looked that formed a nice trend? NEE. Extremely powerful these new IPOs can be. So when we look at GEV, we know it's a newer IPO, initial public offering, and now it's forming a base and a high tight flag. What do I mean by that? Well, it's that ascending triangle moving up like this and then forming a base at the top just like so. Okay, this is absolutely beautiful. If it's not on your watch list, well, then you're looking at the wrong stocks. Kilgore has a couple to bring up, and so we are going to stop with my watch list, and we're going to go over what you want to see. So if you guys haven't already brought a watch list to me, if I haven't went over what you like, well, now's your chance. Kilgore, Night Owl, brings up a couple of tickers, and we can go over those right now. HBM. HBM is a nice looking trend. We also are a little lower on the average daily range percentage, but I know Night Owl doesn't mind playing those slower moving stocks. He's a beast at those options lately. So let's go ahead and take a look at this. The RS rating is 98%, so it's relatively strong. A little bit slower of a mover, but if we look at the stock, it's following that 50-day moving average. There's institutional ownership that likes to follow this 50-day moving average. So if Hudbay Minerals, which we know that mineral stocks has had a nice push recently, if it can hold this area and break out of this trend line, which it looks like it has, it might have the ability to head higher. Now, this isn't going to be on my watch list because it did break the 50-day moving average, and I like to see them get a little tighter than this before heading higher. But I see this having potential. Also, I like to play faster moving stocks. But I do like this trend. I do like the sideways action. And I think if you find volume on the 5-minute day moving average, you might have yourself a nice little trade here if you're not in it already. So nice find here. Let's see, CMG. So we just talked about how the restaurant sector is going to be hot, right? And we know CMG just had a split. So we had a 50-to-1 split. This thing used to be like $6,500 or something crazy. I don't really remember. Maybe $3,000 before the split. I don't remember. But now that we've had a split, little guys like you and I can actually buy into Chipotle. Now, if you guys don't know, Chipotle has been an absolute killer run lately. It does only move 2.7%. It's a big boat of a stock. It's a slower mover. But if you like Chipotle and you like those longer term position stocks, this might be great for your account. Now, it is riding that 21 and 50-day moving average. It did break down the 21 here, but it is riding that 50-day moving average and a higher relative strength rating compared to the overall S&P 500. And the earnings have just continually gone up. This looks absolutely beautiful. If you look at the annual earnings, it has this beautiful trend line on their net margin. So I think this is a safer play. These aren't buy or sell recommendations. I'm just a talking head here, guys. So just keep that in mind. Don't sue me, bro. Okay, so CMG is looking good. I do like this. I do like where it is headed. And it's just a little too slow for me, so it won't be on my watch list. Yeah, awesome. Yeah, MEDS. I really like your call out that you had on this. It moves 14.3%, a very, very fast mover. And I remember you calling it out this morning when it had this beautiful, oh my gosh, this beautiful breakout. So let me zoom in right here and I will show you guys what I'm talking about. Awesome art. This is why I want you to start focusing more on just a few stocks, finding the relatively strong stocks and the higher ADRs and finding these breakouts and then playing them properly, because I really like when you find stuff like this. And I'm glad that you took 25 shares. I hope you took it in this $9 area, because that is where the breakout is. And guys, let me point this out to you, okay? If we just take it off of this, we can draw a trend line however we want. We'll just draw it like this, okay? We could even pull this up here, or we could even move to the hourly here, and we could zoom out and we can look at this a little bit cleaner, okay? Like this, all right? And we can see when this came out on higher volume, right? Here's the volume down here, guys. Just bring this up for you. Here's the higher volume right here. That's why I say that 950 area, right when it broke this previous candle, that would be the area to get in, okay? okay? This would have been the area to watch right at this 850 area. And then after it broke out, we're looking and waiting for that volume. Boom, you could have got in between 9 and 950, and this would have been a killer risk reward right here, guys. A killer risk reward. I absolutely, sorry about that, MEDS. A killer risk reward right here, guys. So I really like the look of this, and I really like this call out. I love the average daily range percentage. You're going to make big money on this. When we move up over $1.50 in one day, you are looking at the right stocks. It's also high in the relative strength rating. So beautiful call out. What was your average on that awesome art on MEDS, if you don't mind me asking? And then we're going to look at VLN. All right, VLN. Let's see here. Let me just do something really quick, guys. I'm going to take one of these. Bahav, what's going on, Bahav? It's good to see you join the chat. Welcome, welcome, welcome. It's good to see you, brother. VLN, yeah, so VLN, man, we've been stalking this beautiful stock, but we have not seen the volume come in for that breakout. You can't get any tighter on a 10-day. The issue is the volume. Now, we do like the volume dry up after a big push up on higher volume, and then it starts to dry up as it pulls back. We also checked the short interest rate this morning, and it's below 0.1. It's not even 1% of its float is being shorted. So we won't have a short squeeze, which is also showing that people are not wanting to short this thing. We just need to see volume come in this and let it pop and rip tater chip to the north side. Just always keep in mind when you're looking at these semiconductors that they are laggers compared to NVIDIA. NVIDIA is your leader. And if you study William O'Neill, How to Make Money in Stocks, he will tell you that the CANSLIM investors, CANSLIM, the L means leader. You want to identify whether you're in a leader or a lagger. Regardless, you want to make sure you're using risk management, okay? But that's why I took NVIDIA over VLN, because it is a leader rather than the lagger. But also this lagger I would love to take if there was volume to back it up. I don't see volume on this thing. So maybe tomorrow we see some volume on this, but I think 8:30 is going to be the tell-all on whether the stock is going to start showing volume or not. All right. SFIX. So I know SFIX is forming that beautiful base. Its relative strength rating is just below that 90, but the average daily range percentage is over 8%. So that looks really, really good. Very happy to see that. It's also riding this 10-day moving average. So I'm going to make sure I have my SFIX alert still set on this, and I do. My alert set at that psychological $4 area. If this beautiful ascending trend base breakout can break out of that $4 area on volume, I will definitely be looking to take something like this. And you know what? I'm going to go ahead and pull this up a little closer to my closer watch list here, guys. So I really like that. Really, really like that. So nice call outs, guys. Now, does anybody else have any other further questions or stocks that we want to go over? Any questions at all? TradeStar, I've seen that you joined. Good to see you. Good to see you in here. Yeah, if you guys have any more questions, just let me know. If not, we'll do the outro, baby. No? All right. Well, guys, I want you to keep in mind, Dan, Bob, Dan, if you'll just post one more time that trader view. Actually, I can just bring it up here. Dan Bob posted the trader view. If you guys want to use the trader view, that's what I'm using right here. You can go ahead and click on that link. It will give you $15 off if you decide to buy the essential plan, but do keep in mind it is absolutely free. You do not have to pay a dime. I will never ask for you to pay for anything. I always give you everything for absolutely free. But if you do decide to get the essential plan, which that is what I'm currently using, it's cheap. It's relatively cheap. And if you use my link, you have the option of the free trial, and then you don't even have to use it. You can continue to use it for free. But if you want to sign up for the essential plan to get a little bit more data or a little bit better way of trading, you get $15 off, or your first month is free, however you want to look at it. So you're more than welcome to click on that, guys. And it does help me out if you do use that essential plan. But I want to make sure you guys know, first and foremost, it is free. Now, I want you guys, each and every one of you, to know that I am so pumped that you showed up today. I hope you made you made yourself a nice watch list. Of course, I'm going to bring you my daily watch list in the morning, but I want to make sure that everybody understands the process. Okay, if you don't, make sure you use the trading school in the YouTube, because we want to make sure you understand my trend and base breakout strategies. It's very, very important, guys, that you understand these trend and base breakout strategies. Why? Because this is how we trade. This is how we trade, guys. All right? And if you focus on how we trade, it might not be right for you. And that's okay. It's okay if it's not right for you. But if you don't understand a process or how a real trader has a process, then you're going to be lost, okay? So quit over trading, quit being lost, understand at least a process, find your way in the market, and then you can change and tweak and do different things when you want to. But I'm glad you're here today. It's pumped to see just everyone. We are packed, guys, and we are growing so stinking fast. And I just have to end by saying thank you. I couldn't imagine that we'd be growing this freaking fast, guys, but it is great to be surrounded with people who want to learn. It is really, really awesome. So thank you guys so much. I really appreciate you being here. You're welcome, Trevor. I appreciate you, Bob. Dan Bob, I appreciate you being here, moderating. TradeWise, you're absolutely welcome. Thank you so much for joining. And I hope you guys just got a lot out of this. I really do. And of course, we are open to criticism. So if you're watching this on YouTube, let me know in the comments what you would like to see. Red Baron says, gracias. De nada, Red Baron. It's good to see you. Thank you so much for being here. And if you guys have any criticism, just put it in the general chat, okay? Throw it up in the general chat. Let me know what you think we can do to make this better, how we can make your stay here fun and fruitful, because we are here trading traders. We are traders training traders. That's exactly what we do. We want to make sure you aren't as lost as I was. My first 3-4 years trading, I was lost as hell. And now that I have a process, now that I have an exact way of trading, now that I've done the data back testing, now that I have proven myself with my, not just my P&L, but my family, my friends, my peers, my mentors, that I am a profitable trader, now I can sit back, relax, and focus on my discipline. And that's one of the hardest things, folks. And once you reach this point in your trading, you're going to feel a lot more comfortable. You're not going to be taking those emotional trades, you know. So thank you guys so much for being here. Let's see. Nalani says, I set up a trading view. I'm a little confused about how to hover over the trading view above and below graphs. You know what, Nalani, if you want to, I'm going to go ahead and end this Discord. We'll have a little one-on-one chat. We'll join. We'll say our goodbyes in the water cooler, and then I'll just chat with you personally to make sure you have a better understanding on how to get that trading view set up. Okay, brother? So I just want to say thank you guys so much. Really appreciate your time here, and I hope you guys have an amazing night. Thank you, guys.